Hello, my name is Nate Crosby, and this is your market update for May 14th. The big I is back, inflation. It's been a number of years since we had to deal with this, but it's back, and it's back in full force. How do we know this? Well, the Consumer Price Index came out and showed that inflation is indeed rising. However, we did not need an index to tell us that. Anybody who remodels their home or fills their tank up with gas knows that the prices of goods are rising. So because of that, we want to take advantage of that. As long-term investors, the strategy doesn't change a whole lot. We're in high-quality companies, high-quality investments, and we hold them for a long period of time. The stocks that got us to where we are likely the same stocks that are going to get us past inflation into the future. They're the stocks that give us the most chance of outpacing inflation into the future. So we're not selling those. But what can we do to the portfolio in the short term to take advantage of what we're seeing? Well, if the prices of goods are rising, we want to own those. We want those in our portfolio. So one of the things we've done with our models is added a commodities index. What is a commodity? Commodities are anything that we buy and sell. So think corn, wheat, oil, gold, lumber. All of these are commodities. We've added that through the Invesco Commodities Index, but there are other things within the portfolio and things we can do to take advantage of inflation. Before we start that, how is inflation happening? Why are we seeing inflation now? Well, there are a lot of guesses as to why that is. The economy is a very complex machine, but here's my guess. There's three things that are basically unfolding in my opinion. One, we have seen an increase in money supply. Through the stimulus, we have pushed more money into the system. So we have more money chasing fewer goods. Why fewer goods? Well, we have a supply chain issue. When we shut down the economy because of COVID, now we're having problems with it restarting, and businesses are not able to get their chips and the materials they need to build their products. The other third wave that we're facing right now is a shortage of employees. Businesses, I talk to a lot of businesses that come in here. All of them have the same story. I am having trouble finding employees. So combination of those three, lack of employees that are willing to work, an increase of money supply, and the supply chain shortage will lead to inflation. Inflation is the rise in price of the goods. So how do we combat that? As I said, we're going to add the commodities index to most of our models to take advantage of that. Real estate is also something that tends to do well in high inflationary times. We have had real estate part of our models for a long, long time. The other thing that we can do within individual stocks, so clients who own individual stocks, we can add companies that ship freight. So when you think of freight, interesting correlation there, the inflationary component of these goods are built into the freight as well. So the cost of freight tends to go up during inflationary times. So these are strategies that we can do to take advantage of the portfolio. So the term that I use when I describe how we kind of build these portfolios is the core of the strategies, whether I'm aggressive or I'm moderate or I'm conservative, the core of the strategies remains the same. But then what we do is we tilt that portfolio to whatever is going on in the economy. So if interest rates are rising, we're going to be in shorter duration bonds. If we see inflation, we're going to lean into some things that will benefit from inflation. The market adjusts or the market changes and we react to it. Overall, the strategy remains the same, but we try to put the portfolios in a position to give us the best advantage in the near term and the long term. I'm Nate Crosby. Thank you for your trust and have a great weekend.